I'd like to talk about insurance. Isn't it interesting? I was watching a TED Talk by a guy who was talking about how there's a vegan restaurant around here, I think. Oh no, I'm on Guadalupe. He's talking about how insurance was invented around the intellectual revolution that pre came before the Industrial Revolution. By the way, this is day 7? Day 7 of my water fast, so I'm not as sharp if I would have had a big cup of joe or a big ass fruit smoothie. But let's try to pull it together. He was talking about how insurance was invented, and I was like, dang. But he's talking about another interesting part is how coffee changed the way people were thinking, because previously the social thing to drink would be beer. Everybody was drinking beer. But they started drinking coffee and their thoughts started to change and the culture started to change a bit. So that's interesting as heck. But yeah, insurance was invented. And then, I mean, I've had things happen, and everybody has, and they've just like, insurance, like, that's just your first thought. It's like, is this covered under insurance? And then I just got hit. My vehicle was making funny noises. You hear it right now. It's like, wow. If all goes well, they're gonna pay for body damage. They're gonna pay for engine damage. I mean, this could be a couple $1,000s. The dude has full coverage. It's like, man, it just feels sort of miraculous to me. I mean, they don't know me from anybody, but and I'm not even a customer of theirs, but that dude is, and they're gonna pay a couple $1,000s for this damage, and that's just amazing to me. And they can do it because they can average things out. They don't. It's very hard to predict the follies of one person, how many accidents one person is going to get into. But it's really easy to predict how many accidents are going to occur on average. And so I wonder if nationwide, or I bet they do it by state to state, I bet they're getting more and more advanced. They probably do it by like county, even zones. But I bet, more people on average get in accidents, then they're gonna want to raise the price. If less people, then they're gonna lower the price to stay competitive. But that's just an amazing little thought, that insurance was invented and how they do it, the law of averages. And then when you pay them something, they make a little bit more money by reinvesting a portion of it. So they can probably actually make money just off of the premiums, and then they have to have like a couple different buckets going on, like operating expenses, and then they have to have a bucket for like paying out claims. Then there's a bucket for reinvestment, so they can make money off of that. But they tend to be more conservative because they're already making money off of the claims. So like a bank facilitates debt, so I feel like they're a little bit more pressured to try to make investments that pay off, because they're getting paid back in small increments, or lending out larger sums, and they're getting paid back in interest, which is a small sum. So yeah, life insurance is pretty amazing, especially, and it's had a little while to really smooth out the the edges, and they actually did. They don't usually make many loans, but they did make loans to the banks during the Great Depression, and that was one of the things that helped get the banks out during the Great Depression. All right.